Morning, everyone. Sorry for the late start here. Hope everyone's doing well. Yesterday we had the midterm elections that kicked off in the US, so that's a pretty interesting headline. Also, with the whole crypto fiasco with FTX.com, a lot of the crypto world was rocked yesterday. We had like pretty much every name in crypto got a nice little beat down there. Just checking out BTC USD right now as we speak, and we're trading 17,500. Let me just see 1 second here. 17,500, right? These mark yearly lows here. Yesterday were traded into the 17,000 or 17,000s, right? As we got a pretty aggressive spill from that 21,000 region here on Bitcoin yesterday. And that was one of the top headlines that did spark some kind of downside in the overall equity market as well before we got some kind of push to the outside. So we'll talk about some earnings that came out. We'll talk about earnings on growth companies, right? Disney as well, and also the midterms. Midterms have not yet necessarily 100% concluded, but if you just check out, and we have CPI that comes out tomorrow morning. So it's 46 to 47 right now, Devs versus GOP. In terms of the midterm elections, right? We don't have some of these states, it would seem. So it's not 100% confirmed just yet. So there are some things to talk about, but not necessarily a whole lot. So let's take a look at this. So crypto, right? Crypto world was rocked yesterday. One of the biggest names in the business agreed to buy its rival, right? While Binance is still doing its due diligence for FTX.com, the deal would be more of a bailout, even if it goes through. There is still a lot of questions swirling around, but the shockwaves for the event dropped Bitcoin USD down more than 10% into that 17,000 level, and likely will have more consequences in the weeks and months to come, I should say, as we could potentially see a little more downside coming out in the crypto space, which does have a pretty positive correlation. In terms of the equity market, right? We've seen both of them slip kind of simultaneously, especially what happened in the equity market at the start of the year with crypto. So what happened? Valued at $32 billion back in January, Sam Bankman-Fried's FTX received funding from the likes of BlackRock, SoftBank, Temasek, Tiger Global, and Ontario's Teachers Pension Plan. That's interesting. I'm from Ontario. And however, under these surfaces, recent questions swirled about the balance sheet of the sister trading house at Alameda Research, resulting in the FTX liquidity crunch as customers pulled about $6 billion worth of withdrawals over the past 72 hours. So it's a stunning reversal of fortunes for one of the most popular exchanges in the industry, given the fact that FTX and Alameda bailed out several crypto players themselves this past summer, including BlockFi, Voyager Digital, and Celsius as well. So flagging the apparent issues was Binance CEO Changpeng, CZ Chao, and he said on Sunday that the rival exchange would liquidate its holdings of FTX's token, FTT USD, due to unspecified recent revelations. And on Monday, Sam Bankman-Fried, or SBF, dubbed the tweets as false rumors and said that FTX was fine, but apparently the exchange had too many of its assets wrapped up in FTT token. And unfortunately, I don't have a perfect answer for you, but the details are still being hashed out, said SBF. So he wrote in a email to investors, "I'm sorry I didn't do better, and I'm going to do what I can to protect customer assets and your investments." Seems a little too late. So is CZ's move aimed at propping up the crypto industry, countering broader concerns about the asset class, or a jab at SBF? So Binance's agreement to buy FTX is non-binding, but in traditional crypto, it may want to consolidate during the crypto winter before things warm up again. In an event, there is a lot of explaining that'll be done in the coming days, so it's something to keep out for, which can affect the overall equity market as well, considering there is a decently positive correlation between the two, and which is likely to trigger another call from the regulators who've been disturbed about the lack of guardrails and freewheeling in the crypto space. So there is continued downside here. I'm just looking at Bitcoin right now. In terms of the overall equity market, yesterday kind of a pop drop and then kind of rallied into the close. I'm going to be watching that as well. I'll give you some levels here on the equity market space. But another thing to mention, We had the midterms, right? In the US, the midterm elections, where very few seats were changed hands. The first key narrative shift came well after midnight with Democratic John Fetterman projected by numerous decision desks to win Pennsylvania's seventh seat, the first seat in the chamber forecast to change party hands. So, with the Senate coming into election day, deadlock at 50 seats for each party, the flip made it increasingly likely that not only Republicans would take control of the Senate, as they hoped, but that the Democrats might end up increasing their majority. So I'm not that well versed by any means in the political space for the US. So it's something to consider as I talk about this. I'm just reading some of this news and kind of breaking some of this down, kind of more interested in what's going on with the equity space based on what may happen here. No red wave. That may depend on the final results in Georgia, Arizona, Nevada, and Wisconsin. Fetterman's win leaves 48 Senate seats in Democratic hands compared to 47 for the GOP. Over in the House, early projections saw the Republicans picking up a few dozen seats, and while they're still likely to control of the chamber, it appears that they might do so with a slim majority similar to that of the Democrats coming into the day. So perhaps 225 versus a needed 218 seats. So NBC's decision desk seeks it much closer, 220 GOP seats to the Democrats' 215, or when all is said and done, a 5-vote margin. So obviously we don't have 100% of the reporting just yet on anything, but it doesn't look like anything we have seen so far has spooked the markets naturally. So we're going to see how that shapes up. Stocks have generally performed pretty well in a one-year period after the midterm elections that date back to 1950. And according to LPL strategist Barry Gilbert and Jeffrey Buchbinder, with nearly identical figures under Democratic and Republican presidents. However, this time around, the government is contending with soaring inflation, an energy crisis, and a worsening backdrop for the economy, which is something that a lot of people are kind of brushing aside, especially when it comes to seasonality. They don't consider what is going on, and it's not a regular schmegular economic forecast right now and space that we're dealing with. So again, we have inflation, we have the CPI numbers that come out tomorrow morning. That's going to be something to consider because right now we are still in the majority of a 50% basis point hike coming out in December, which is the final meeting until the end of the year. But that can quickly shift the tides, and if we see a hotter than expected inflation number, so that's something that we do have to consider. And I think that kind of pushes more so the importance of where this market's headed rather than kind of looking at this midterm election. So how the inflation, how the Federal Reserve kind of wraps things up with quantitative tightening, even though they have been still pumping money into this market. So another thing, right, we have some equity things to take a look at, right? Elon is continuing his Tesla stock selling spree, cashing out another 19.5 million shares worth about $4 billion from Friday to Tuesday, which opened up a lot of that downside here pre-market on Tesla and continued throughout the session. So shares of the electric vehicle company have fallen more than 11% over those 3 sessions, leading Musk's net worth to drop below 200 billion. And Musk also, his latest sales mean that he owns just around 14% of Tesla, which has been supplanted by Berkshire Hathaway as the 5th largest company on the S&P 500 index. So it seems maybe the last time Elon Musk tweets no further Tesla sales planned today. That was on April 28th, implying that the large financing needed to take over Twitter was in the balance. So the billionaire made a similar pledge in August as he offloaded about 7.9 million shares, liquidating about $6.9 billion, saying that it's important to avoid an emergency sale of Tesla stock in the hopefully unlikely event that Twitter forces this deal to close and some equity partners don't come through. So the deal did close and Musk does continue to sell by billions. And don't forget, at the end of 2021, Musk also sold 15.8 million shares of Tesla worth about $16 billion to help a reported $11 billion tax bill after polling his followers. So to go a little deeper, Musk also wrote on Twitter on Friday that Twitter had suffered a massive drop in revenue due to activist groups pressuring advertisers and was losing over $4 million a day. Some of that cash he's getting his hands on could be used to shore up the company amid reports of debt, right? The debt that Twitter took on, which could mean it's paying more than $1 billion in additional annual interest payments. So Musk arranged to finance $44 billion for the Twitter purchase, with about $13 billion of bank debt, as well as $7 billion in equity commitments from other investors and partners, meaning he is only on the hook for more than $22 billion, which is naturally a lot of money, of the purchase price. And he already owns 9.6% of the Twitter stake, which is about $4 billion, and he's an additional $2.5 billion for the closing costs. In other equity news, we saw that Disney dropped about 7% after hours into the $93 area on Tuesday, following a fiscal quarter where it missed profit expectations. Stellar revenue results from its parks, experiences, and products division, up 36% year over year to $7.4 billion. Were weighed down by its media and entertainment side, which is down 3% year over year to $12.7 billion. So the CFO also dented expectations for the fiscal year, predicting that revenue growth less than 10%. So there are also bigger concerns, looking to counter investor worries over the direct-to-consumer sales. That House of Mouse highlighted revenue and earnings forecast for Disney Plus. It said that the streaming service would achieve profitability in 2024, right, that fiscal year. So while a series of price hikes in December and ad-supported tier would likely boost the financial metric, operating losses will improve by about $200 million next quarter and will be even lower in the fiscal second quarter of 2023. So that's something to consider. The markets are trading. Let me take a look. Oops, open the wrong thing. Markets are trading slightly lower from yesterday's close, not that much, right? If you take a look at the S&P, we'll talk about the futures here just a bit. So you have a huge level at the 38.36, which is the start of a new distribution block to the upside, especially if you get above that hump, above the 40, 42 area. You can look for that move, as we did yesterday, into that 38.70, 38.67 region. Then above, I think the top target for the bulls is going to be 38.95. But right now we are slumping lower, holding that 38.36 to the downside. And I'll be looking to see if we can trade into that 92.95 area, 37.92.95, and see how that holds. It's a huge distribution block and ledge for the buyers to come in again, as they did yesterday, propping the market to push back towards those highs after that larger drop. If you start opening the market downside 37.90s to the downside, you're going to see that expected slip as we do enter a new distribution block to the downside, coming down ideally into 37.33. Now, there's a few things to consider. If we do manage a close below that 38.05-07 region, I think that there is some bear pressure that might come out for that next leg to the downside. Of course, we have a hot CPI expected number coming out tomorrow. Well, I shouldn't say hot, but a CPI number coming out tomorrow morning, which can kind of shift the balance of this market. So I'm going to be watching this, expecting slower movements, lower volume, and watch the crypto space and the FTX news, because that can stir things up coming up here today. And again, we could have a mix of slower action, tape bomb news, more speed and volatility in the market, followed by some more subdued action coming into the CPI report coming out tomorrow morning. So Thursday and Friday could be good trading days. Today, kind of mixed. We'll see how that shapes up. So again, thanks again, and we'll do this tomorrow. Let me just see.